Welcome back to Forex Focus with tastyfx. Today, I'm going to be teaching you all about the head and shoulders pattern and how to trade it. So what is the head and shoulders pattern? It's a candlestick pattern that's a widely used tool to predict trend reversals in asset prices, and it's based on past performances around key levels. This pattern is straightforward to identify, making it ideal for traders of all experience levels. It also provides valuable visual cues for entering short or long positions based on its bearish or inverse formations. So here's how to spot it. There's three distinct peaks that make up this pattern. The pattern begins with the left shoulder, decreases and increases to form a higher peak called the head, and then decreases and increases once again to form a similar sized right shoulder. The neckline connects the lowest points of the two troughs. If the price breaks below the neckline after forming the right shoulder, it signals the potential for a bearish reversal, indicating the end of the previous uptrend. So now I'm going to teach you all how to trade this pattern. The first step here is identifying an uptrend. You want to make sure there's an uptrend to begin with, as there must be the potential for a downtrend in order to form that left shoulder. Like I said, you're going to want to identify a peak followed by a decline. This will form the first shoulder. Now, to look for the head, you want to look for the price rising after the first shoulder, forming a higher peak and a decline. And then finally, you want to look for another rise that creates a peak like the first shoulder, and this will be the second shoulder. Now you're going to want to draw the neckline, and this will be to confirm the break. You're going to connect the lowest points of the two troughs following each shoulder. This will form the neckline, and this is one of the most essential parts. To officially confirm the break, you're going to wait until the price breaks below the neckline after forming the right shoulder. When this happens, this shows the potential for bearish reversal. You're going to pick your entry point here, and this is where the action starts. Once the price breaks below the neckline, enter a short position and sell. Here, you're going to carry out some risk management and set your stop loss and take profits. For your stop loss, place this above the right shoulder or above the neckline. This will protect from false breakouts and limit losses if the pattern doesn't play out as expected. For your take profits, measure the distance from the highest point of the head to the neckline, projecting it downward from the neckline breakpoint. To confirm trend reversal after it crosses the breakpoint, monitor the price action and trade volume to ensure that the trend actually is reversing. A sustained move from the neckline coupled with increasing trade volume provides a stronger confirmation and reliability of the reversal. You also want a good exit strategy. If the price reaches your take profit levels, like I mentioned earlier, exit that trade to secure your profits and don't get greedy. Consider exiting the trade if the price action shows signs of reversing back above the neckline or if the market conditions abruptly change. Now we've talked about the bearish pattern, and here's the bullish pattern. This is the inverse head and shoulders, and it's characterized by three troughs instead of peaks, with the middle trough being the lowest as the head and the two outer troughs being higher and roughly equal in height. So some key takeaways from today: the head and shoulders pattern is really good at predicting trend reversals with three peaks, a head, and two shoulders. Confirmation here occurs when the price breaks the neckline with increased trading volume and indicates market conviction, where you can enter trades, set stop losses, and calculate profit targets based on this pattern. This pattern is also very versatile and useful in forex, stocks, commodities, and crypto, and is also really suitable for traders of all experience levels. Have a great day!